Welcome back to the deep dive. It is Friday, February 13th, 2026. And, depending on how you're looking at the charts this morning, it's either a very lucky day or a bit of a horror show for Expedia Group.
Hey, confusing is probably the word I'd use.
Yeah.
Because if you just read the headline numbers, you'd think champagne corks were popping in Seattle. But then you look at the stock ticker in after-hours trading.
And it's down over 6%. That is exactly where I want to start. I'm looking at these numbers. EPS is $3.78.
Right.
The street was expecting, $3.32? That is a massive beat. Revenue is up 11%, gross bookings up 11%.
Yeah.
On paper, this is a company firing on all cylinders.
It is.
So why did the market hate this report so much?
It's the classic disconnect between what have you done for me lately and, what are you going to do for me tomorrow?
The forward-looking stuff.
Exactly.
Yeah.
The beat was backward-looking. The drop was all about the future.
Yeah.
The CFO, Scott Schenkel, he gave guidance for 2026 bookings growth of only 6 to 8%.
6 to 8%. After just delivering double digits, that feels like hitting the brakes.
It's a deceleration, for sure. And in this market, that's a dirty word. Management called it prudent, given the, quote, dynamic macro environment.
Which investors hear as, we're scared of a recession.
Pretty much, they see that and they run for the hills, even if the current quarter was great.
But hold on, is it actually a slowdown, or is this just sandbagging, setting the bar low so they can step over it later?
That's the multi-billion-dollar question, right?
Yeah.
But there is something interesting here. While revenue beat, the gap between revenue growth and bookings growth, it's getting smaller.
And bookings are what you want to see running hot.
You do. If revenue is up but bookings are cooling, it might mean the raw volume of travel demand is softening, even if they're getting better at monetizing each trip.
So the river of travelers might be slowing down a bit.
It might be. And that gets to the real story here. Expedia isn't just trying to paddle harder. They are, I think, fundamentally trying to change the kind of boat they're in.
By pivoting to B2B.
It's exactly. From a consumer marketing machine into an infrastructure company.
Okay, let's dig into that B2B side, because that's the part of the report that really jumped out. Bookings grew 24%. I mean, that's huge compared to the consumer side.
It's the engine of the company right now. And we should be clear what this actually is. It's not just corporate travel. It's white labeling.
So when I use my credit card points on, say, the Chase portal to book a hotel,
You are almost certainly using Expedia's backend.
Ah.
They're powering banks, airlines, offline travel agents. They're saying, look, fighting Google for every search is expensive. Let's go where the customers already are and just power the transaction.
But doesn't that come with a margin penalty? I mean, B2B has to be thinner than selling directly on Expedia.com, right?
You'd think so, historically. But look at the EBITDA margins in this report. They're up nearly 400 basis points.
Wow. Okay, so they're getting more efficient even with that shift. How?
It's operating leverage. Once you build the tech, what they call the Rapid API, and plug in a partner like a huge bank, the cost of each additional booking is almost zero.
Because the bank brought you the customer. You didn't have to pay for a Google ad.
Exactly. So you're trading that marketing risk for partnership stability. And that's a much harder moat for a competitor to cross.
Okay, that makes sense for B2B. It's sticky, but they can't just abandon the consumer brands. I mean, Vrbo and Hotels.com, that's still the face of the company.
Sure.
And those bookings only grew 5%.
Well, it's pretty anemic.
It is, but you have to look at the quality of that growth. For years, the whole online travel agency playbook was growth at all costs, spend whatever it takes.
The empty calories customers, the ones who click an ad once and never come back.
Precisely. They're done with that. Now it's all about marketing leverage. You saw it with their Super Bowl ad.
Oh, yeah, the one place you go places, the one that got like 200 million views on YouTube. That's the one. That's top-of-funnel brand advertising. It's about getting you to open the app directly instead of starting your search on Google. And they claim their apps are 30% faster now, which helps.
Speed is a feature, sure. But is brand really enough? I mean, Expedia has been trying to replatform and unify their brands for what feels like 5 years. Is the house finally fixed?
That's where the One Key loyalty program is supposed to come in. For years, Hotels.com and Expedia were basically separate companies. Now it's all one tech stack, one loyalty program.
To boost the attach rate.
The holy grail. If they sell you a flight, and then because of the points, you also book your hotel and your car, their profit on you just skyrockets.
It sounds good in theory. But I want to push back on this with the AI topic. Every company is yelling AI on their earnings call. Usually it's just a chatbot that doesn't work.
Right.
Is Expedia's claim that AI is driving margin expansion real, or is it just vaporware?
It's surprisingly real,
Hmm.
but it's not in the flashy way you'd think. It's about the grunt work.
Okay, give me a concrete example.
Customer service. Think about the winter storms. Flights canceled everywhere. Usually that's a 4-hour hold time.
Oh, I know it well.
Expedia claims that during the big disruptions in Q4, their answer times were between 1 and 3 minutes.
1 to 3 minutes. I find that very hard to believe.
The only way that math works is AI. They have self-service bots that can actually handle the simple stuff like change my date or where's my refund without a human ever touching it. That frees up the agents for the real disasters.
So that's a direct cost saving. Okay, but I saw a term in their notes that caught my eye. Agentic browsers. What in the world is that?
This is maybe the most important forward-looking part of the whole call. We're moving to an internet where your AI assistant will book travel for you.
Right, I'll just tell my phone, book me a weekend in Chicago, and it just does it.
Exactly. But for a bot to do that, it needs clean, structured data. It can't just look at a pretty picture of a hotel. It needs an API. Expedia is basically trying to become the most readable travel platform for those AI agents.
Yeah. So they're organizing the library so the robots can find the books.
That's a perfect way to put it. If Expedia's data is the easiest for Google's AI or OpenAI to use, they become the default inventory provider for this whole new era.
Which is just another form of B2B, really. They're becoming the infrastructure.
It is. And that's why the stock drop feels a little short-sighted. The market sees slowing consumer bookings and freaks out. But they might be missing this huge infrastructure build-out.
Well, let's talk about the money they're making right now. Because they are sitting on a massive pile of cash. The war chest. What is it, $5.7 billion?
And they are using it. They bought back 1.1 million shares in Q4 alone. Since 2022, they've bought back over 20% of the company.
I always have mixed feelings about buybacks. On one hand, it's great for my ownership stake. On the other, is it just financial engineering to make the EPS number look better?
It's a valid critique. But they'd argue they are investing in the business, and this is the cash left over. And they're raising the dividend by 20%. They're basically paying you to wait for the strategy to pay off.
They're also still buying things. I saw a note about acquiring tickets with a Q. That's the experiences market, right? Tours, museums.
Yep, the final frontier of travel digitization. It's always been a messy, fragmented market.
Highly fragmented.
So by buying tickets, they're trying to plug that gap. It fits the one-stop shop idea. If they can sell you the flight, the hotel, the car, and the museum ticket, they own the entire trip.
Which brings me to a comment from the CEO, Ariane Gorin, that really stuck with me. She called travel a high-stakes purchase.
I love that phrase. It explains their whole strategy better than any metric.
It really does, because if I buy headphones and they're broken, I'm annoyed, I send them back. But if I fly my family to Hawaii and the hotel lost my reservation...
It's a catastrophe.
Yeah?
You can't return a ruined vacation. You can't get that time back. The emotional stakes are just so high.
And that's why they're so obsessed with verified reviews. They said 70% of travelers check them. In a world of AI-generated junk, verified is suddenly a premium feature.
It absolutely is. They're betting that as the internet gets noisier, people will show loyalty to the platform that guarantees the trip won't fall apart. It's a peace of mind premium.
But, and I have to be the devil's advocate, does that matter in a recession? If that dynamic macro environment really hits, do people care about peace of mind or just the absolute lowest price?
That is the risk. That's the whole ball game.
Because if it's a price war, the loyalty play gets really tested.
It does. People might abandon the whole ecosystem to save $50 on a hotel room.
Oh.
That's why the guidance was so cautious. They know price sensitivity goes way up in a downturn.
So we've got a company that's operationally much stronger, better margins, better tech, tons of cash, but it's facing this macro headwind that spooks investors.
And a company that's shifting its whole identity from travel agent to travel platform.
Okay, so let's wrap this for the listener. The stock is down, the quarter was strong, the future is automated.
I think the summary is this. Expedia is in the middle of a very difficult pivot, and they're actually executing it well. They're becoming a margin-focused, tech-first infrastructure company.
But the market isn't paying for discipline right now. They want growth.
The market wants 2019-style growth. Expedia is offering 2026-style profitability. It might just take a few more quarters for Wall Street to catch up to that new reality.
You know, here's a thought I want to leave everyone with. As I was reading about the agentic stuff, It strikes me that we're moving to a world where the interface might disappear.
The invisible travel agency.
Exactly. If an AI books everything, the brand Expedia might matter less to you, the consumer, than the pipe Expedia matters to the AI. Is it possible they win the war not with the best Super Bowl ad, but by having the cleanest data?
It's the Intel Inside strategy for travel. You don't care who makes the chip as long as your computer is fast. If Expedia becomes the Intel Inside for global travel, that's a massive business, even if nobody ever visits their website again.
A fascinating gamble. Being the plumber isn't sexy, but the plumbers always get paid.
They certainly do.
That's it for this deep dive into Expedia's Q4 2025, a complex quarter for a company in transition. Thanks for listening, and we'll catch you on the next one.